Hey guys, Max here, and yesterday was the 10th of March, and it was pretty damn crazy to be honest. We saw another manic day in the markets, a complete reversal from the day before. Markets were down mostly, but still saw a lot of volatility, some deep troughs and mini rallies along the way. The hopes that the Russian invasion of Ukraine would wane and slow down kind of just evaporated, so investors really aren't sure what to make of asset prices right now. Then, to make matters even worse, we got inflation data out, and once more, for what seems like the 10th month in a row, it was worse than we expected. And then we will, of course, finish up with a quick update on what's going on in Russia. So what exactly happened? Well, the S&P 500 dropped 2% in the early hours of the day, and then it slowly rose up to only lose 0.4% by the end of trading. The Nasdaq followed a similar route. It fell about 2% at its bottom, but it rose throughout the rest of the day and ended up only losing 0.9%, but these are still pretty decent sized losses. Let's also not forget that the S&P 500 is now down 11% year to date, and the Nasdaq index is now down over 17% year to date. Now across the pond in Europe, we saw a similar sort of thing. The FTSE 100 was down 1% across the day, and the Stoxx 600 was down 1.6%, but this was much more consistent. There weren't any mini rallies along the way. Why was it more consistent? Well, there's just a little bit less speculation in European markets. There's less volatility, and the direction of change tends to be the same, but the way the markets actually move in that direction tends to just be a little bit more rational. Now, the FTSE is only down 4% year to date, outperforming pretty much everything else right now, and the Stoxx 600 was down 12%, underperforming the S&P. Over to the east and in Asia, a quick look at the Nikkei, and we saw some crazy moves recently. It rose 3% the day before yesterday and then fell nearly 3% yesterday as problems in China and Asia have emerged. We're going to have a full-length video talking about that soon. As of right now, the Nikkei is now down 14% year to date and 18% from its recent highs. So the markets were down for the most part, but why were they down? Well, inflation and Russia, the two biggest threats to our economies at the moment in 2022. They've been tussling with each other for influence for the news stories and the headlines and our attention, and January was all about inflation, and then February was all about Russia, and now March is sort of a big mixture of both. Right now, we'll cover inflation, and then we'll talk just a little bit about Russia later on. Maybe I'll put out another full update video on the war, the state on the ground in Ukraine, what's actually happening, maybe today or tomorrow. But inflation is the really big news for today. So the CPI data from the US came in, and the markets were understandably worried that it was bad, and it was. Now, it is important to remember that the markets price in their expected data, and for yesterday, they expected 7.8% inflation according to the CPI, which is already a really high, really bad number. The reality, though, was 7.9% year-over-year inflation, which was, of course, even worse. Now, markets and investors alike are unhappy at this, and the prospect of Fed rate hikes all across 2022 are all but guaranteed at this point. It's going to be a very hard economy and an environment for people to build businesses in. Now, what were the details of the inflation? Well, it was 0.8% rise month over month, higher than expected, and 7.9% year over year, also higher than expected. This is now the worst year-over-year inflation reading we've had for over 40 years, which is awful news. For young people, this is the worst it's ever been. I've literally never been alive at a time of worse inflation. And then to just make sure that there's no hope whatsoever, this inflation is going to keep getting worse. The core inflation figures, which just ignore the most volatile stuff in the CPI, like food and energy prices, well, that hit 6.4%, which is also very, very high. Now, the things that we saw rise the most over the last month were gas prices, food prices, and rent prices, which is obviously really bad news. Some people often say when it comes to inflation, just don't buy the things that are going up in price. But when the things that are going up the most are gas, food, and rent, you don't have a choice. You can't just not spend money on food, transport, or housing. It isn't really possible. Still, there are people downplaying this. I saw an opinion article on Bloomberg calling for the Fed to hold off on their rate hike in March and to claim that actually they need more zero interest rates and more quantitative easing. Now, wage inflation is another fear. A lot of people are afraid of a wage price spiral where they counteract off each other and cause inflation to just continue to get worse. And we didn't see that, but we did see wages increase, albeit lower than the rest of the CPI. Real wages are still decreasing, and so far they're down 2.6% this year. That means that if you take a random person off the street in an American city, they are earning almost 3% less than they were last year in real terms, and that's very bad. Now, the worst thing about all of this inflation data is that it was last month's data. The oil price spike that we've seen, the natural gas price spike, the wheat price spike, and the nickel price spike are all not included in this data. The Russian invasion and all of the huge levels of inflation that will be brought about by that and the sanctions that we've put on into Russia, that's all unmeasured here. I really can't emphasize how awful this inflation is probably going to get. It is, without a doubt, the #1 threat right now to our economies all over the world. Now, the Fed is probably going to raise rates in under a week, probably about 0.25% or 25 basis points, but each month after that, after March, we will probably see another 25 basis point hike throughout all of 2022. For some perspective, the last time inflation was this bad, the Federal Reserve had set its interest rate at 14%. Right now, it's 0%. Powell is looking utterly pathetic. Now, the worries of a recession are also growing. Goldman Sachs have come out and said that their recession risk rate is 35% right now. They've also cut their growth forecast for the US as well. Personally, I think it's even worse than that because this is coming from the banks who have been wrong about everything inflation related so far. Now, talking about people who have been wrong for years, Janet Yellen refuses to estimate the future inflation rate. She knows that she'll either scare the markets with a really high figure or she'll say something low and she'll get it wrong. But she is claiming that there is no recession risk at all, again, coming from the woman who has gotten everything wrong. Really, this is the main reason that markets dipped. They're unhappy about the prospects for the future. And then the Russian invasion of Ukraine has not stopped yet. And there was some optimism of progress about that the day before yesterday, but that has now sort of disappeared. Now, as for the rest of the markets, well, the US dollar is continuing to perform quite well, probably on the continuation of the Ukraine war, as we've discussed over the last few days. Bond yields advanced and prices fell. The US 10-year Treasury yield is now up 3 basis points to 1.99%, comparatively a high figure. The German 10-year yield is now 0.26%, far above the negative territory it's been in over the last year. Gold prices fell 1%, moving in the same direction as bond prices, and once again, the price of gold is hovering back around that $2,000 an ounce mark. Oil prices did see a dip, thankfully, and WTI crude is now sitting at $106 a barrel, but that's still about 30% too high, and it's still awful for inflation, don't get that twisted. Now, there is some possibility that OPEC produces more oil while prices are high to try and make the most of that potential revenue while they can, but really, it's unclear as of yet what will actually happen with this, if they will increase supply or if they'll even throttle it. If they're happy to see these high prices, we just don't know. Now, finally, the crypto markets were mostly steady. Bitcoin did see a small rally on this high inflation news and it rose 1.5% for the day, but that is quite a small move for Bitcoin and it's currently sitting at about $40,000, so right where we left it really. Now, Ethereum moved in that same sort of direction, up 1.8% from yesterday, now sitting at $2,600. Altcoins moved in the same direction, but a little bit more. Small gains across the board, nothing crazy, but most altcoins were up something like 2 to 4%. What we did see was investors try to paint the picture of Bitcoin being an inflation hedge, and that could happen in the future, but it isn't the case so far, in my humble opinion. To be honest, I think it's probably going to take 10 to 20 years before we get to the point where Bitcoin behaves as an actual inflation hedge. Now, really quickly, as of finishing up making this video, there are some early reports that progress might be made between Ukraine and Russia regarding their negotiations, and that is resonating with hopeful investors who would love to see an end to all of this chaos. As of right now, futures are up, but this news isn't confirmed and we really have no idea right now if it will lead to anything real, but markets are stupidly inefficient right now. They are fraught with fear and uncertainty, so volatility is crazy high, and of course, that means it's high when markets rise as well as when they fall. If you enjoyed this video, then make sure to leave a like and a comment and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.